I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers podcast show, and today is November 3rd.
And today we'll be talking about what the feds did with the Fed funds rate and also give you an update on the interest rates for mortgages.
If you're new to the channel, be sure to subscribe, comment, and like. Also, this is for informational purposes only. This is not financial advice. Getting right into it, a lot of people are talking about what the Fed is doing. Fed raised the rates on Wednesday, November 2nd, yesterday at 2 p.m. Eastern time. That's when they meet. There's 8 meetings a year. Did you know that?
Boy, those got to be exciting meetings, huh?
Yeah.
Wow, laughing.
And they're a 2-day meeting, and then on the second day, you basically do a press conference and release it. But the rates increased 0.75. It was already anticipated. And this is a new chart because the big question a lot of you are asking is, when is the Fed going to stop raising the interest rates? I mean, we're wondering that every day too.
Yeah. And I want to throw in this little tidbit. So I was pricing a loan today. We knew that the Fed funds rate was increased by 0.75 like we thought they were. I quoted that borrower. And then about an hour later, Jerome Powell actually spoke.
Yes.
And that changed rates a little bit. And I was like shocked. Okay, I've been in this business how long? But the little nuances that this market picks up on, that about an hour after the Feds officially raised it, it changed yet again.
Yes, what happens is the Fed releases it, and then 30 minutes later, then the press conference starts, and then he starts talking about it.
And they start listening to all the words, his tones and his body language, and is he mad looking or is he happy looking? Literally all this stuff.
all this stuff. So we want to show you this because this is going to start helping us answer that question: when will the Fed stop raising rates? And I don't, for a lot of you who are analytical, this will make sense. But if you're not analytical, that's okay. I'm going to show you this right here. The important thing is, you see this arrow? This is November. This arrow is where we had that raise of 0.75%. That was November 2nd. That's Wednesday. There was, before it came out, before the Fed announced it, there was an 87% chance that that's what was going to happen. So and that's what happened. And that's exactly what happened. It was raised 0.75%. The rates here in the future are all this is from the Chicago Mercantile Exchange. These are the option traders and the futures traders. These are basically their bets. They are betting that the Fed rate is going to be doing this. It's basically going to go.
Right. The actual Fed funds rate will be doing this, not mortgage rates, but that the Fed funds rate will be doing this.
Yeah, and the Fed funds rate now is at 4%. Okay, so that's not, of course, to be confused with the 30-year fixed mortgage. It's 4% is the Fed funds rate. They believe that will go up another 1.25% because we already had this increase. But basically, you can see that the bets are that the Fed funds rate will get up to 5.25.
So in other words, as long as the Feds do this exact little turquoise curve we're talking about, mortgage rates should be unchanged for the most part. There's always little things that can move the needle a little bit. But for the most part, as long as the Feds do exactly this in the future, and look how far out in the future that is.
Yeah.
It's the end of next year.
Right. So the interest rates that we see today on mortgages are taking into account all of this already. So if these percentages, if you see these numbers right here, the 40% chance that on March 22nd, the Fed rate will be 5.25. If this number decreases and this increases over here, that means mortgage rates are going to get worse.
Right. So as long as that curve stays the same, mortgage rates will stay the same. So again, I think you answer the analytical, mind on where we are. And again, this graph is awesome. And if we could make it bigger one day, that'd be even better. For those that are not so analytical and you're like, man, you're making my brain hurt. What we're hoping is that we've seen the Feds do enough to where interest rates do not go up anymore. Again, because we know the Fed funds rate will be going up according to this schedule. We just hope it doesn't go up even more. And we really do hope that it's not. I think that there's proven data behind it to support that. Hopefully we are at the top and we may stay there for a little bit.
For mortgages. For mortgage rates.
For mortgages.
Yeah.
But that's one of the big takeaways is that they've been doing a really good job. pound down inflation. It's working. It's just not working as much as they want it to, but still it should be good enough. And that mortgage rate should be topping out and hopefully coming back down in the future, 12, 18, 24 months.
And the Fed should have been way ahead of this a long time ago as far as they're doing a good job. Yeah, they're beating the heck out of the financial markets, but they should have really been on this right when COVID started. They should have seen this coming with the supply chain issues.
We talk a lot about lending here in the office because obviously that's what we do. But and we talk about, we're like farmers. We need rain that just we need interest rates that just kind of sprinkle our farms. None of these droughts where interest rates drop dramatically, even though people want them to drop dramatically. And we don't want these spikes. We just want them to be consistent so the market knows what's going on.
Yes. So can I go back to when will the Fed stop raising rates? The bet on Wall Street, the futures traders, they are believing between March 2023 and July 2023, that is when the Fed will basically hit that ceiling and then probably start coming back down.
Right, so, but even if they come back down, the mortgage rates already take that into account, don't they?
Yep.
So again, just because the Fed funds rate comes down doesn't mean all of a sudden mortgage rates automatically come down.
So here's the Fed funds rate. It's since 1998. I'm just showing you this view so you can kind of get a visual of what it looks like if we go up to, this is going to be about March 2023 to June or July, something around there. And then the Fed funds rate goes back down. Now, that'll only happen if inflation gets under control and all that. But let's show you what the overlay looks like with the Fed funds rate is this, the red. It's hard to see the red.
Like maroon.
Yeah, and then you have the blue is the 30-year fixed. Okay, so you can kind of see it. They're very related. I mean, the 30-year fixed moves every day. That's kind of a big takeaway here. The Fed funds rate only moves 8 times a year. And sometimes, a lot of times they don't move it at all. They just keep it the same. Mm-hmm. So you're going to see the Fed funds rate here in the red be very volatile up and down. That's because when they move big. But they don't move often, whereas the 30-year fix is just constantly going up and down, up and down, up and down every day. So wanted to show you that. And another chart here from 1971, or going back to 1971, you can see the 30-year fix, where the rates are today are basically where rates were in 2002.
Which is still hard for me to believe. I never thought rates today were back in 2002. 2002, though we had September 11th, I don't ever remember anyone freaking out about mortgage rates.
Yeah, in the 90s, nobody was complaining about the rates being 7-8%.
Yeah, so it's only because of the recent past are we able to see and strike that huge difference between what the rates are today. Yeah, but big picture. We've totally been here before.
Yeah, because all the homeowners who've been around for a while, they tell you stories. We all have heard them. Well, gosh, that's nothing, man. Rates were 18% in 1981. Of course, that was short lived, but they were above 10% for like 6 years. Mm-hmm. But anyway, wanted to show you that, and then going right into where the interest rates are today versus our update yesterday. So again, the Fed raised the rate 0.75, but look here. There's no change. The 30-year fix is 6.75. The 15-year fix is 6.125.
Yeah, perfect point. The Feds literally just increased that Fed funds rate by that 0.75, but look, mortgage rates are the exact same. So the 30-year FHA, 6.375. The 30-year VA, 6.375.
That's right. So I'm hoping that makes sense. Let us know if it doesn't. You have questions in the comments. But remember, these quotes are based off of these factors for conventional FHA and VA loans. They do not have any points. There's no extra fees to get those rates as long as you have. These are very typical scenarios. Mm-hmm. So I hope that all makes sense. If you do have any questions for us, be sure to email us or call us. Hey, check out this awesome calculator that we created for you to use. If you look in the description of this video, you're going to see a Google Sheet link. You can click on that link, then go to File, make a copy, and
then it's yours to keep.
It's yours.
So you're out there, you're looking for homes. You may have seen calculators, but this is the calculator of all calculators. It's like it just has a little extra oomph. It's got it all in there. It talks about payments and funds to close and income to qualify. Anything in yellow, you can adjust. So let's go over a couple of those things.
Estimate the interest rate. It doesn't have to be perfect. If you don't know it, you can just estimate your credit score, put that in there. The mortgage debt, your
Non-mortgage
monthly
debt.
non-mortgage debt,
Yep.
car payments, student loans, etc.
Anything that you think would show up on your credit report.
Because this calculator can calculate not only your payments and how much the funds to close, but it'll also estimate what your income will need to be to qualify.
Right.
And this is a fantastic, very thorough calculator. So go through the sales price, put in what you estimate your sales price, the term of the loan, taxes, homeowners insurance, HOA.
And I will jump in. The closing costs and prepaids are really hard to figure out. So either use whatever number we have in here or just call us and we can give you a good number. You can find out everything else. It's just those numbers are going to be hard.
Put in the down payment options you want to look at. Then you'll see this sheet. It'll give you the breakdown of everything from your payments, the income needed to qualify, cash to close. And this is a grid format, but you can also scroll down here and see these nice bar charts breaking down those payments.
Yep. And this payment is so good. It actually has the HOA payment in there, but the reality is the HOA payment will not be part of your mortgage. So just know that we are including it in here so you can see your total budget, but it would not be a part of your mortgage payment every month.
And then you can see your down payment options and how those income requirements look on this bar chart.
That's right. And if you don't make this, go to your employer and get a raise.
Oh, yes. So be sure to take a look at that link. Make sure to make a copy for yourself and ask us if we can help you in any way.
All right. Thank you, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.